We are looking directly at the live market summary for Datavault AI Inc., ticker symbol DVLT, and the numbers on the screen are painting a complicated picture for the bulls. The stock is currently trading at $2.21, reflecting a significant intraday decline of $0.21 or 8.68%. If you are watching the tape, that is a harsh red candle staring back at you, and it directly contradicts the explosive momentum many investors were banking on just 24 hours ago. When you see a drop of nearly 9% in a single session, especially for a company that just released headline-grabbing news, it forces you to pause and ask whether the market is broken or if the smart money is seeing something the retail crowd is missing. The volume has been heavy, the volatility is spiking, and the price action suggests a tug-of-war between high-octane speculation and cold, hard profit-taking. The expectation coming into this week was palpable, almost electric. You have a company with AI in its name, operating in the hottest sector on the planet, announcing a massive $7 million deal to digitize mineral assets in Tanzania. The narrative was perfect. Investors expected this to be the catalyst that would send DVLT into the stratosphere, joining the ranks of other high-flying tech darlings. The belief was that the convergence of artificial intelligence and real-world asset digitization would be an instant ticket to higher valuations. However, the reality we are witnessing on the chart today is a sobering reminder of how the market actually functions. Instead of a parabolic continuation, we are seeing a sell the news event or perhaps a deeper skepticism about the execution risks involving international mining contracts. The reality is that the market is demanding proof of concept over press releases, and that friction is exactly where the stock price is struggling today. When you analyze the intraday movement, it is clear that the selling pressure started early and persisted. This was not a flash crash, but a sustained distribution of shares. It looks like the early morning optimism was met with a wall of supply, likely from traders who bought in during the run-up last week and are now locking in gains. If you are sitting there with your Fidelity mobile app open watching this ticker slide, you might be wondering if the fundamental thesis has changed. The answer is likely no, but the market mechanics have shifted. Momentum traders, the kind who populate the Robinhood app and chase daily percentage gainers, are notoriously fickle. They arrive for the party and leave at the first sign of a cleanup crew. Today's action in Datavault AI is a classic example of liquidity shifting from aggressive buyers to passive sellers who are happy to unload shares at these levels. Let's talk about the catalyst that is driving all this attention because it is genuinely fascinating and bizarre in equal measure. Datavault AI announced a strategic partnership with MTB Mining Limited to digitize their mineral reserves using something called Sumerian technology. We are talking about copper, gold, and even the Windsor ruby being tokenized or digitally verified. On the surface, this sounds cutting edge. It sounds like the future. But if you dig a little deeper, you have to ask yourself why an AI data company is pivoting so hard into Tanzanian mining assets. This is the disconnect that might be causing today's 8% drop. Institutional investors, the kind who manage billions in Fidelity wealth management accounts or Interactive Brokers stock trading portfolios, tend to be suspicious of style drift. When a tech company suddenly becomes a resource verification play, it introduces a layer of complexity and geopolitical risk that algorithms and risk managers hate. The algorithms that trade alongside NVIDIA stock or Apple stock are programmed for predictable growth vectors, not hybrid business models involving African mineral rights. However, we cannot ignore the sheer financial impact of the announcement. A $7 million minting deal with a 30% perpetual royalty is not a small number for a company of this size. It represents a significant injection of potential cash flow. This is why the retail sentiment on platforms like SoFi Investing remains stubbornly bullish despite the red tape today. They are looking at the potential revenue scaling. If Datavault can actually pull this off, if they can successfully create a digital marketplace for these commodities, then the current valuation at $2.21 could look absurdly cheap in hindsight. But if is the most expensive word on Wall Street. The market is discounting that if heavily today. It is saying, show us the money first. This skepticism is healthy, even if it hurts your portfolio in the short term. It flushes out the weak hands and sets a more realistic floor for the stock. We also need to look at the broader context of the sector. Small-cap AI stocks have been incredibly volatile. They don't trade with the stability of a Schwab Intelligent Portfolios allocation, they trade like options. When you buy a stock like DVLT, you're essentially buying a call option on the management team's ability to execute a very difficult pivot. The drop today could also be correlated with a general cooling off in the speculative tech sector. If the broader Nasdaq is facing headwinds or if interest rate fears are creeping back in, the first assets to be sold are the high-risk, high-reward names. Datavault AI fits that description perfectly. It is not a blue-chip dividend payer, it is a speculative vehicle. Investors using Interactive Brokers platform tools can see that the beta on this stock is likely through the roof, meaning it amplifies market moves in both directions. Today, that amplification is working against the bulls. Let's shift gears to the financials briefly because they provide a backbone to this story. The company recently reported third-quarter revenue growth of 148%. That is a triple-digit growth number. In any other environment, that alone would support the stock price. They also raised their guidance for 2026. So you have a company that is growing its top line aggressively and telling the street that the future looks even better. Why the sell-off? It often comes down to the burn. High growth often comes with high cash burn. Investors analyzing the balance sheet through their Fidelity brokerage accounts are likely looking at the cash runway. Can they afford to build out this mining verification infrastructure without diluting shareholders further? That is the quiet fear lurking behind the $7 million headline. If they have to issue more shares to fund this expansion, the equity you hold today becomes worth less tomorrow. Comment below how many shares of Datavault AI you currently hold and what your average entry price is. I am curious to see if most of you are holding from lower levels or if you got caught in the recent hype cycle. Also, let me know if you actually believe in the real-world asset digitization thesis or if you are just here for the volatility. It is also worth noting the specific mechanics of the Sumerian technology mentioned in their press release. This proprietary tech is supposed to be the moat that protects their business. In the world of intellectual property, having a unique tech stack is critical. If this tech can truly provide immutable proof of ownership for physical assets, it has applications far beyond mining. It could be used for real estate, art, or supply chain logistics. This is the blue sky scenario that keeps long-term believers holding through an 8% drop. They are not looking at today's candle, they are looking at a potential buyout target or a licensing monster 5 years down the road. But again, we have to ground ourselves in the present. The market is voting with its wallet today, and the vote is negative. For those of you engaging in self-investing, it is crucial to separate the company from the stock. The company Datavault AI seems to be making aggressive, interesting moves. The stock, DVLT, is a financial instrument subject to supply and demand mechanics. Right now, there is an overhang of supply. This could be early investors from the private rounds exiting, or it could be short sellers smelling blood. If you look at the short interest data available on your Fidelity trading platform or Interactive Brokers account, you might see an uptick in bearish bets. Short sellers love to target companies with complex, hard-to-verify business models. A mining deal in Tanzania is the perfect target for a short report because it is difficult for the average investor to verify the ground truth. This creates fear, and fear drives selling. Furthermore, we should compare this to how retail heavy stocks behave. Think about how Robinhood crypto traders react to news. It's binary. It's either the greatest thing ever or a total scam. There is very little nuance. Datavault AI is currently receiving the crypto treatment from the market. It is being traded on sentiment and headlines rather than discounted cash flow analysis. This is dangerous if you are over-leveraged, but it is an opportunity if you are patient. If you are using a strategy like dollar-cost averaging through Fidelity Investments or Robinhood fractional shares, days like today are technically what you wait for, a red day in an uptrend. But you have to be sure the uptrend is still intact. Technical support levels are going to be critical here. If $2.20 breaks, where is the next floor? Is it $2 flat? Psychological levels like whole numbers often act as magnets. If the stock falls below $2, it could trigger a wave of stop-loss orders from traders who use Robinhood cash management accounts and set tight stops to protect their capital. A flush below $2 could be ugly, but it could also be the capitulation point that marks the bottom. Watching the order book on a platform like Thinkorswim or checking the Level 2 data on Interactive Brokers' fees and commissions